What's up, guys? This is Nedu, your Forex coach, and in today's edition of iThrive FS live stream trading, analyzing the markets, and then looking at our weekly outlook. Thank you so much for following us and depending on us, and also counting on us for quality weekly Forex review and outlook. Last week it was a very, very favorable week, for all of us at iThrive FS. The weekly outlook we provided really worked according to expectations, and that helped a lot of our followers and traders from around the world to make quality trading decisions. I also know that our weekly outlook for today, looking at different currency pairs as time will permit us, will bring you quality analysis, quality setups, quality outlook on the various instruments that you trade in the market, and also give you some tradable opportunities if anyone provide itself today. If you're coming here for the first time, we'd like to make you welcome to our channel. And without much ado, we're going to enter right into the charts. All right, this is GBP AUD, which is one of the pairs that we are looking at analyzing today, giving you very strong and reliable quality information that will help you to navigate this market. We will identified last time this head and shoulder pattern right here. Okay, when the market also changes direction by presenting this, inverse head and shoulder. And after a couple of days and weeks, it gave us decent pattern, which is working out very, very well. It's right in order. I think we're also able to provide you with some advice. Yeah, this sold and then it's coming back to the neckline again to retest. We have here as neckline support, okay, area for this particular pattern. Neckline support area here for this particular pattern. And of course, we make use of the Fibonacci retracement to, and maybe look out for one or two technical indicators that can give us confirmations before we enter the market. But please always note, I tell you this, that in trading the forex market, okay, on weekly basis, you will need to review what the dollar is doing. If you are trading dollar pairs, of course, dollar dominates, the global economy for the same self reason that all the economies of the world have their foreign reserves in United States dollar. So you must know as a forex trader with direction that the United States dollar is going. So you to be able to position yourself rightly, okay, in the market. And we're also going to review that in the course of this trading, talking about the dollar strength index and also the US 10-year bond yield. Okay. And it's important, I said, that you know the direction that the currency pair or any commodity or instrument that you are trading is going, looking from the higher time frame. This is what you do. And if you really don't do this, maybe you're a day trader or you're a scalper, it's important to know the direction of least, resistance. Okay, if I'm buy, it is more likelihood of winning the market than if I sell. So that will help you to know and set up your trades properly. But for this pair, we're observing this chart pattern. Even if you look at it from the daily time frame, okay, it's still valid here on the daily time frame. And what validates this chart pattern is actually a break below the neckline, which is what we saw happen last week here. A break below the neckline. There's a neckline, the market broke below the neckline and came back to retest the neckline around here. And we've been able to project a trend line a downtrend line because the market has turned from bullish to bearish. All right, and also we use our Fibonacci retracement tool, and these are very simple methods of analyzing the market. Fibonacci retracement tool, and we have identified this zone between 50 and 61.8% as what we refer to as a killer zone, a zone that most retracements, happen like 80% of the times. Most retracements in the market happen between 50 and the 61.8 level. All right, and it's so important that you take notes of that. Very, very important. You take note of that and put it in your trade. I tell you every time, the more the data available to you to analyze the market and make your confirmations, the better the better the probability of that trade going in your direction. Okay, so looking at this head and shoulder pattern formed, here is the neckline, resistance area. Price has broken the neckline, went back to the neckline to retest, which is typical of price behavior. Okay, and see what the market price is doing. It's responded. It gave this, can see that candlestick there. Okay, we can see at this zone, we can see this and this combination, which qualifies to a large extent as an evening star and also can qualify as a bearish engulfing candle. And we are seeing retracement because there is a zone here. I can identify a tiny zone of liquidity here, liquidity zone somewhere here. Okay, market is responding to that. You can see this area. Okay, market struck liquidity from here and pushed up, and also you can see that happening here, and you can also see the same thing around the zone. Okay, so it's coming back to peak. Look at this candle. This is the major candle you are looking. It is a very strong bearish candle that should not be overlooked. Okay, at this point, what you should be looking to do is to sell the markets, looking for good confirmatory signals. All right, if I take my Fibonacci retracement tool, let's assume price has done this. Where is the most likely place to get to before it starts to return? Let me delete this now. So we look here. We're looking at this area between 50 and 61. Okay, this area. So let me remove the fib level. Okay, and of course there was an imbalance and which the market is coming to fill again. You can see this the shadow, or that the lower wick of this candle, and price coming back to close those inefficiency, and most likely to begin to descend from here down. So my expectation for GBP AUD is bearish. So we can do a temporary setup here. While the price is there, you can just come maybe somewhere below and put a pending order, okay, and target here this low as your take profit. But in the event that market closes above this high, if it comes back here, they come back here to come and pick some liquidity around here, okay, and come down around this zone, back to that zone again, maybe trying to make a double top, kind of, and come down. Let's take this, okay, here and come down. Whatsoever around this area, maybe 1 point. Let me put the price tags for you. And these are ultimate target, which you can actually break down in between if you are trading this. So you can do a sell stop at 1.90448 around this area. Okay, if you're already in, just still secure your stop loss. Secure your stop loss still above this area. If the event of price moving, breaking this zone and breaking this trend line, we may invalidate this head and shoulder setup. I don't think so. Let's just see what happens. This 4 hour time frame, you might let it go to 1 hour time frame to see more of price action and then the kind of candlesticks that will form around here. Okay, that's what to do. Move to 1 hour time frame or 30 minutes time frame to check the candlesticks that will form. If you find a bearish signal around those zones, then you can decide to pull your trigger. Then for us here, this GBP AUD is still on a bullish bias for now until otherwise stated. There's some level of liquidity. We saw inefficiency around this zone, so price may enter into here and starts to come down, which is also coinciding with at least 50% of this whole strong bearish move. Okay, before it can begin to drop further. All right, so let's move to our next currency pair. I want to take it in order. Next currency pair is the USD JPY. Okay, before the USD JPY, let's look at the dollar strength index. The dollar strength index. Dollar strength index on the daily time frame. On the daily time frame. Oops. Okay, on the daily time frame, dollar strength index is on a bearish move. Okay, after this end diagonal we are seeing here. Okay, the bearish run has been depleting ever since, pushing down from this strong support zone here, which got broken last week. Which got broken last week, and we actually expected some move, yeah, for it to correct, either correcting into back this zone, okay, back into this zone, which was a level of support, probably expected to be a level of resistance here and push down, but that was a validated price. It's been seen to move higher. So we're looking particularly between the 50 and 61.8 retracement level, which now coincided also with this level of support, which also might now form another level of resistance, which is confluence, okay, which is confluence, and this might happen also. It may just push and test this trend line, okay. This is a weekly trend line, and it's coming at the push there. So we are, in a nutshell, expecting a little bit more of dollar strength, okay, into this zone before it starts pushing down. But let's move to, let's see whether we can find more clearer zones. Okay, here we can find an order block here. You can see these two bearish candles that formed before the break of this structure lower. All right. Okay, price pushed into it this morning, and it's been dropping. It's been dropping. Then we also find another 4 hour order block here around this zone. Let me totally remove this. I know we are looking at other blocks. Identifying, okay, here. We'll send it here. So we expect price to push into this zone and start to come down, or push further into this other block, and then begin to come down. All right, so we are seeing all of these as a correction, in 1 hour time frame. Let's look for more information here. All right, so the market tested this zone, okay, and left here with an order block which swept liquidity. You can see it here. All right, it moved, spiked up, okay, and came back to retest it. This is what actually gave this, validated this correction that we're seeing here. Last week it was a massive drop in it was a massive drop in the dollar strength, and this caused all the GBP, USD, Euro, US, and even gold to push down further. All right, so this other block market moved, retested it, and it started to correct, broke this neckline, and now started to correct. You could see this zone here was just broken, retested, and we saw all of this correction. Okay, and I think the correction is not over yet. It's not over yet. Price push back into this zone, right? Into this zone and correct, or move into this 4 hour order block here and then push down. Let's go back here. Yeah, into this zone and now push all the way down. All right. So, and if this is going to happen the way we project it, of course, what it means that if dollar is still going to get more strength in the short time, GBP, USD, Euro, USD, AUD, USD may still edge lower. The edge lower, whichever direction that they are moving now might be seen as just a near bullish correction. It may see edge lower. I'm expecting particularly in this zone, I'm expecting the dollar strength to still move into the zone. And if this doesn't happen, there is a news coming up. There's a news coming up on the, I think that's about 2:45, yeah, 2:45 p.m. today. The flash manufacturing PMI and the purchasing managers index, and also the services PMI. All these are a measurement for inflation. So you can see this two major news coming out 2:45 p.m. on the dollar. My expectation, really, my bias is that it might weaken dollar further. So from now into 2:45 p.m. today, if that will hold, it means dollar most likely might still correct into any of these two, other blocks, and then by 2:45 p.m. and that news gets printed and is maybe weakening the dollar. This we are going to see these moves coming down, and if this happens, the Euro USD, the GBP USD, and to a large extent the gold will have to move, okay, in the bullish direction. All right, so let's move to the USD JPY. Okay, the US JPY predominant trend had been bullish, okay, whether you're looking at it from the 4 hour time frame or from the daily time frame, it had been bullish. Market making higher highs and higher lows. And the dotted lines you are seeing here are weekly resistance, key zones of support and resistance. And markets usually respects those zones when price hits right there. Okay. And this was our projection last time, and it actually happened. Price to moved into this area. Okay, let's see what is happening here. Let's even look at Fibonacci retracement levels from here to the downward side. Okay. Price has comfortably moved into the 50 to 61.8 retracement zone. Okay. Any moment from now, there could be massive drop, particularly even on the 4 hour time frame. The price closes below this, but it's something that I'm also seeing. I just want us to have an idea. Remember that all of these are just mere corrections. The price is still bullish, except the dollar weakens by 245 from that news. We might see these corrections move further. Okay, removing this, let's move to 1 hour time frame and see how this has been, correcting. Currently, this is where the market price is. We're seeing a very strong order block here. Maybe I combine these two. Yeah. So this is a consolidated area here. The market makers picks very strong bearish orders. Okay. Okay, so they might likely move into this zone, allow price to move into the zone before correcting. And whichever way you see it, all of these also is a consolidated order block here. This area, this strong area of correction. So market price moving into it, then you can now specifically streamline these other zones. This might be where it will happen within the bigger areas that we have marked. Okay. All right. 1 hour time frame, we are seeing some chart patterns forming here. There is a flag, identify a flag here, which got broken and market price pushed. This is another one. This is another correction that happened here. Okay, this is a wedge, and then another correction is happening. So we can do this like this, and here. Okay, and do this. So this is the current corrective structure we're seeing here with these. We can call this a flag. We can see this as a flag. The head of that as a flag. Okay. Then I can bring in my Fibonacci retracement tool to see to what level it has come. Okay, price has moved. It tapped into 50% of this whole move, tapped into 50% of this whole move, and is seen going back up. So you might see this into this zone before that weakness, which we're expecting by 2:45 p.m. It is a bias. I'm just looking at some fundamental data that have been released in the past on the dollar, and I'm coming up with that assumption that most likely that news will print negative for dollar, the flash and PMI, and the strong impact news. Barely maybe about an hour, 20 minutes from now, that news will get to the wires. And between now and that time, this correction can complete. Let's see what will happen in the USD JPY. So far, Now I can tell you if I'm to take any trade on this, I'm going to buy instead of selling. I feel the correction is over. It didn't get into the 61.8%. Paraventure it gets in there. We can make some allowances for our stop loss and push into this zone. So I expect the USD JPY to move further up into this zone before the correction downwards happens. Okay, just weakness of the dollar expected. We're going to see how this, fares. Technically speaking, market has come to a level of correction. Even though it hasn't hit, it got below 50% to enter into that zone. It's between 50 and 1.8%. Okay, it can still bounce off from here. If it bounces off from here, gets to this level, we're expecting further move into this bearish. This level can be maybe the inducement. So after this level, enter into the major zone here, we can have the price begin to drop. But let's see how that plays out. We'll move to another currency pair, and this time the CHF JPY. CHF JPY. I want to look at it from the 1 hour time frame. From the 1 hour time frame, you can see, even if we move to the weekly, it's important to know the direction of the trend. Okay, it's obvious that the market is bullish. It's making higher highs and higher lows. Once you know this, then you begin to check your levels. Where are your key levels? Let me move to the monthly time frame here, and then okay. Maybe I should do it on weekly so I can have more data. All right. I'm just trying to get some levels for you to mark some levels beginning from the current zone. It seems that CHF JPY is already at an all-time price level, all-time high. You see, this has been the previous all-time resistance, and this is amazing. It's amazing for this pair. It has broken an all-time high, all-time resistance zone. All-time resistance zone. All right, so we look at here. This can give us, yeah, mark here. Looking at this drop here, this high, and also here. Can locate another zone somewhere here. This is some routine I do to know my key levels and price gets to those key levels. There's some kind of reactions, and with a combination of candlesticks, you might be able to locate a very good, tradable opportunity and trade the markets right away. Okay, we can have here this one here. So let's move to for daily and see if we can have more zones that we can add. All right, let's move back to candlesticks. Okay, now you can see that this check JPY is being bullish. It's been bullish even since 2020, 2019. I think it did a lot of corrections here, bottom tanked around that area, and then started pushing up. And there seems to be a good trend line that one can draw from here, okay, into the current price. Into the current price. Interest rate differentials between the Swiss National Bank, and also the Bank of Japan can be one of the reasons that this market is doing what you can see here. Okay, and of course, look at this. This was last Friday. This is the bullish engulfing. Price push into this zone, push into this new high here. Okay, around here into this new high, and it got corrected. And remember, market does this a lot. Price does this stuff when it is in a trend. Okay, when it breaks a previous level of resistance, it comes there. It comes there to retest, okay, to get more liquidity and then push. We call this confluence and push. So you need to identify price behaviors, how market price behave at certain levels. Okay, we can see that happening here. This was a previous level of resistance, which got broken and was, put back here on Thursday to retest it and to retest it and push again, giving us this bullish engulfing candle at a structure. Bullish engulfing candle at the structure is very solid. This is one pair you have to wait. Okay, you have to watch this pair. Currently, I'm seeing this bull candle. Okay, and there seems to be pullback. Okay, this pullback. If this pullback ends as we are seeing it, it's coming back to this liquidity area again. Okay, coming back to this liquidity area, which you can cross here. We're still on higher 1 hour time frame. Okay, it's coming to do kind of a balance, because when this market was broken, this high was broken, and an imbalance was created, inefficiency was created. So price is pushing back into that same zone. If the day ends, if it ends like this today, the way it is looking, which may not likely be, because I expect some bullish action. The bulls might be interested at this price. Okay, interested at this price to push it up. Remember, these two candles, this bull candle and this bear candle here, is a bullish engulfing candle, telling us that the bulls are still so strong in the market. All right. And of course, we have seen that market had been making higher highs and higher lows. You can see when this bullish engulfing happened here, price eventually pushed up. Look at another one that happened here on the structure. Price pushed up here too. It made a new high, retraced, gave us a this bullish engulfing, price pushed up. It made a new high here, retraced, gave us a bullish engulfing, price pushed up. But paraventure market ended like this, the way it is here. This is a bullish harami. It's a bullish harami, which will stimulate the bulls again to push market price to a fresh high. Push market price to a fresh high. All right, moving to 4 hour time frame on this chart, you might see more. Look at this was the previous high. Okay, it got broken and then retested and gave us this bullish, strong bullish candle, which is still correcting. And right now it's correcting into this level of previous resistance. Okay, that got broken, which might become a support now. So let's check our retracements from here to this high. Okay, price has moved into 50%. So what you may see is market dropping a little bit further. It might drop a little bit further into this zone, all right, before gaining more strength. All right, so even right here, it can do some short-term trend line for our time frame here. Joining this to from here to here and then here. So price might do this, might just do this and enter into this zone, touch this trend line and push all the way up and push all the way up. So we're looking at markets getting some of these confirmations. So you're going to get some confirmations. Let me add an indicator and see. Maybe let me use a stochastics or moving average convergence divergence. Okay. Let me take it now. Give me two at the same time. Remove one. Okay. Should I? Okay, let me remove this. It's not giving me what I want. Let me look for stochastics. Stochastics. Is to I set my stochastics at 1033. 1033. This one 10. The K length, the K smoothing 3, and then the smoothing 3. Okay, so it can be more. Okay, you can see smoother. All right, on the 4 hour time frame, the stochastics is also showing overbought, and that's why from here it should overbought. That's why you're seeing these corrections into this previous level of resistance. You can see how it's been working, previous level of resistance. When market broke it, it tapped into it and pushed up. The same thing is playing out here. Okay, so you really have to devise a way. I feel it might do more correction into the 61.8, or it has come between 38.2 and 50, which is also a good level for retracements to hold. So let me remove the so I can see pure price action. It can move further to the 1 hour time frame and see what the market is doing with combination of course, it's already sweeping some liquidities here. All right. Let me remove this. Okay. I can do 1 hour time frame. 30 minutes. What's happening 30 minutes? Okay, it's making higher highs, higher lows, higher highs, higher lows into this zone. So we might just wait for price to do this. Price to do this. It has tapped into this zone. It might just move, break this short time trend line and return back into it. And this is the time you're going to put the trigger. And of course, here will be your first level to to target. And of course, it's going to make more move on the upside. So if that happens, so you can have your trend line properly secured. Okay, break of the trend line. You're not hurriedly entering into the market to wait for a break of this trend line. The market breaks the trend line this way, it will most likely retest some of these lows again before pushing back up, and you'll be targeting, firstly, you'll be targeting the high. This high will be your first target, because this is the all-time high for CHF JPY. All-time high is a significant level that price would want to retest. It's a fresh time high. Price would definitely want to come here to do a retest. And the retest here and then most probably make stronger push up. Of course, you know that the Japanese economy, the BOJ, the Japanese central bank of I think something had some not clear, understood. What chart is this? Okay, I'm gonna fill you in on the chart. I think there was a technical issue here. The chart we are looking at is the Chef JPY chart. Chef JPY chart. Okay. And we are expecting market price, okay, to push up and retest this zone before we move. But in the case of that not happening, just secure your trend line in chart pattern. This now, what the structure that is forming here looks like, it looks like a flag. Yeah, that could be seen as a flag. Okay, in which case you might be targeting the length of this flag. The length of this flag, whatever it is what you should be targeting. And this will give you a very good trading opportunity throughout this week. Very good trading opportunity throughout this week. Okay, can come here, and if you're trading, if you're trading swing, this comes handy for you. Around here, entry, entry around this zone, targeting that high. Of course, your first target should be this previous high somewhere here. Okay, and this gives us a potential. It's giving us potential of about 250 pips into this week. I said we move the time frame to 1 hour 15. Okay, you can see the market is coming back to retest this zone. So a retest of this zone, or maybe can give a leg lower. It can maybe it's doing this. Come back here. It's giving it a leg lower into this zone here, which is the 51, the 50% to 51.8%, and then market will come back up. Okay, and that is what most likely is going to happen. It's still correcting as we speak in a flag. Okay, this is a bullish flag. A break of this level will see markets pushing up. A break of this level will see market price pushing up. So this is coming back most likely into the 50% to 61.8%, which is what we have identified as the most probably place a price corrections happen here. If it does not happen, so we have these two zones marked here. Let me change the color. No, try to get a distinct color. Okay, into this zone. So this first zone here is the previous high. Okay, is the previous high. Price tapped into it and pushed up. It may not work here. All right. Okay, so it might try to come back to give you a double bottom, but with a lower W right leg lower into the 50 to 61.8%. When this happens, the next thing you have to start looking at is your candlesticks. Okay, look for candlesticks, the bullish signal candlesticks, maybe an engulfing pattern, all right, or maybe you see a hammer form right into this place, okay, showing some rejections to the downside. All right. So we have identified the flag correction. Whenever it finishes correcting, this is the resistance line for this flag. A break of this level will see market push back up, maybe going to make a fresh high. A fresh high. We're just projecting to this level for now because of this flag. The length of this flag we're seeing here, okay, is what we are expecting to form. Let me move it back to the 4 hours. Okay. Okay. So we're identifying here as a target level here, fresh high, and then you can position your stop loss anywhere here. Okay, let's move to another currency pair. And of course, I know a lot of you have been waiting for us to talk about gold. Yes, I'm seeing some. It's a very deep correction. Of course, our eye is on the 2,000 price level, which is around here, around here. That's really where our eye is now on the gold. Gold has been making since after this inverted head and shoulder, it's been pushing up, making corrections, both deep and very short-lived corrections, but leaving us with a lead on, with some candlesticks. This is a very deep correction that we are seeing here using Fibonacci retracement tool. Okay, price has broken below the 61.8, but then left us with some liquidity flushing of liquidity around this area. So you can see all those bars. All right, there may be a likelihood if we put a trend line here. This is what I will expect to be almost 100% sure. But this liquidity has given a sign that the market is going to be bullish. Okay, after it has swept this liquidity, it has broken this trend line, might go up, return into this zone again before pushing up. It might not do this and continue to go at least to hit this 2000 that we have been expecting. Market has been looking for this, and when this happens, then the intended long-term weakening of the dollar might see this happening. Okay, might see this happening. All right. We are bullish buyers today for gold. This should provide you with a lead. There is a bullish engulfing candle that's formed here. You can see squeezing of candles here, candles around here with these liquidity signs. Okay, if the market does not pick strong momentum and push the upside, okay, then there could be a minor pullback into the zone again before the market moves, because this trend line has been broken by this bullish candle on 4-hour time frame. Very, very remarkable bullish candle on the 4-hour time frame. This gives a signal that the bulls are stronger. I've had more of them in the market right now. Okay, price may break straight. I have some running position the bulls to continue to take over, at least to break this, at least at this high. All right, a break of this, which is around 1987, would see market price maybe gain more momentum into the 2000 mark that we are. Oh, all right. Okay, there was a short this in there. Oh, I don't know. You guys are not seeing the chat anymore. So sorry. Okay, I was talking about gold. So sorry. There was, I think it was a network disruption that affected the setup. All right. So this is it. This is it. So this is my expectation on the gold. Just done some signal of liquidity here. The bulls are so strong, market can push straight. At least we'll be watching this level, the high, the previous high. We'll be watching the previous high first. Here, a break of the previous high might be that time. It might be just a little margin to hit the 2000, and then we can begin to look opportunities for selling on gold. For now, gold, we are bullish. We have like 3 positions running on buy gold. Okay, about 3 positions running on buy gold. What was the last pair we did was CHF JPY. I'm not sure you saw everything I said there before that technical issue. Okay, this is what I was showing. I said this is a previous level of resistance. Markets, looking at the Fibonacci retracement tool, market has retraced 50% of this long bullish move. Okay, it has done 50%, and that 50% coincides with our confidence zone, the previous level of resistance, which most likely will be support. All right, and we also identified a flag here. This is a bullish flag. A break of this bullish flag will see markets move to give us another fresh all-time high. Fresh all-time high on this CHF JPY. And one of the underlying fundamental driver for this is also the differential in interest rates between the Swiss National Bank, and also the Bank of Japan, with no sign of intervention coming. All right, so a trap into this zone can do the magic we're expecting for the buyers to enter. It might interest the buyers to come in at this zone. But peradventure that doesn't happen, market might still pull back down into this zone between the 50 and 61.8% killer zone, and now make that strong bullish move. Make the strong bullish move. Don't miss this. If you miss it here, okay, wait for the breakout. And the first level of target should be this all-time high of 163.966, which is here. All right, I've already located a short-term trend line here. Okay, price may push to test that trend line, but just be watching. Replicate this drawing on your own chart. Replicate it on your own chart, and then let's see how the market will go. This week, we're expecting more bullish actions on CHF, JPY, more bullish action on gold. Okay, and we are also expecting, you can see this, the euro, USD, JPY. Okay, we're expecting the market to get into the zone, and then push up. All right, push up. These are the two other blocks we have identified. All right, this one here might just be an inducement. Okay, market might get there, retest. Okay, it has been seen to even touch it a little and then produce these corrections that's currently happening now. Okay, price getting to this area or breaking above this bullish flag, we'll see market price get to this zone. And when this zone is mitigated, all right, and remember, by 2:45 p.m., we're expecting a weakening of the United States dollar. This news on PMI, flash manufacturing PMI might weaken the dollar. If that happens, price will move into the zone, and then before it starts this other projection. The first pair we looked at was the GBP AUD, where we identified, yeah, you can see that stuff I said, the market has pushed into this zone. Okay, if we move to 1 hour time frame, yeah, it's giving us some sign. We said, yeah, it can move it here. We expected it to touch here and come back, or most likely also get back to this high before coming back. You know, the time we analyzed, there was a full candle into this zone. Okay, it has touched it and is beginning to retrace downwards. Let me move to 30 minutes. Okay, you can see that. Okay, what I said was on this time frame. Is it a 4 hour time frame? Yeah, we saw this. This was the pattern we saw. Yeah, you can see this strong bearish candle, which touched this level of liquidity. Okay, pushed back here. So the GPAD might be ready for another strong bearish move. Okay. Okay. And we also analyzed the dollar strength index. Dollar strength index, we said price most likely will move into this zone. Okay. Move into this zone. Okay. And this is 4 hour order block here. Move into this zone and come back. If that doesn't happen, this other one would make the magic to push here and begin to drop between now and 2:45. All right. I don't know if anyone has questions. If you're not following us on Telegram, please do that. We usually post. I'm not seeing your chat. Okay, I don't know if you can see it now. I've already corrected that. Okay, the chat issue has already been resolved. Before then, there was a little bit of technical hitch on the chat. I don't know what caused that. Okay, but I've already resolved it. If you have any question, you can ask a question. Otherwise, follow us on Telegram, iThrive FS, on TikTok, on Threads. We're also on Instagram and Facebook. and on YouTube. So make sure you join us for very, very valuable, analysis. And a lot of times we post quality trading signal, free trade signal on our YouTube, on our Telegram channel. You can come there, pick quality trades and build your account. And these are the most of the things we'll be looking at this week. And as the opportunities present themselves, we are posting trading opportunities on our Telegram channel. So if you're not there, please go right in there and join the Telegram channel. And if you're not following us, subscribing to this channel on YouTube, please do that now. Click on that subscribe button and also the alert so that you'll be the first to be notified when we have quality our next live stream, so you'll be informed. Okay, thank you so much, every one of you, for joining. I will see you on our next broadcast. Thank you.